Hello, everybody. This is Franz, and we're back for another Anatomy of a Trade. And today I'm joined with another cameo appearance by Sensei Roman. And we're going to look at a trade that was done by a WTC2 student in the fall semester, Joseph, in the crypto Solana. So welcome, Roman, and why don't we take a look at this trade?
Thank you, Franz, and good to be back.
Great. So, well, I'll just give the background, and real quick, we can see that we've got just a general, it's almost hard to see a trading range here. It's definitely a downtrend. I think we could say around 10:30, this is intraday. We do see some climactic behavior, and we see a selling climax with high volume and high spread that tells us that there's some sort of change of behavior occurring. We do get this automatic rally that takes us into a trading range with a definite sort of downsloping characteristic. And we see that Joseph's entry is essentially right after, it's sort of an interesting trade here in terms of how he read this whole structure, because we see that after the automatic rally, there's just a very high test. We go back up and we don't quite overcome the highs of the final breakdown. And this is, I think, really good tape reading on Joseph's part, because his entry is occurring right in this area of weakness where we can see a loss of momentum and this beginning of a breakdown back to the area of the initial selling climax. So what do you think, Roman?
Sorry,
You might be
I was
muted.
muted.
Yeah.
Yeah, that was a really good selection for the bias, and I think that the key is all in the aggressiveness of the approach to the actual entry point, right? So we're seeing a lot of supply availability. Supply is coming in. That increases aggressiveness of how the price moves to the downside. Please note all of the extensions. Please note all of the spreads. Please note all of the volume signatures. So you know that there is a continuation of this bearishness, in that even after the stopping action, which is clearly defined, we cannot overcome and commit multiple times progressively above the high of that capitulation bar. We have only one progressive close. This is within that close. And then it's just a beautiful non-demand bar that would attract weak hands, and then you just sell exactly on the failure of that. I really like this type of entries. I use those type of entries a lot, where there is this type of failure, global failure once, and then local failure twice. So what happens next is of utmost interest. I think that the point of entry is pretty good. I mean, like, you could make an argument that you could make it maybe a little bit earlier, but it doesn't really matter. But after the selling climax, when we're expecting, let's say in phase B, a move into maybe possible phase C, right? So phase C either going to be a high or low as a test, ultimately last point of support, or a low or low as a spring, as a shakeout, and also possibly we could have in phase B a minor sign of weakness. And what's beautiful about this trade is that regardless of the bias, regardless of the bullish or bearish bias, you're still expecting the move to the downside. So this is the spot where you don't have to be directionally correct, but you have to be structurally correct, understanding the structure. So, and here we are traveling to the downside. And I would be thinking that this is some kind of secondary test. And my expectation would be that at some point around the tail of the selling climax, this is where we would have to close the position or to trim the position. So to me, this local increase of the supply has some demand behind it. And therefore, I would probably be thinking here about trimming or even exiting on a secondary test type of reaction. Please note also how the spread to the downside is diminishing relative to any other spread that we have seen before. So those are the characteristics of the secondary test. Now, even though I've said it, Joseph has opted out to hold on to this, and rightfully so. Why? Again, because of the aggression to the downside. It's still too much of their aggressive behavior, so there might be some expectation of continuation. And then we're seeing how this structure right here is still shows weakness with the demand, right? So demand is coming in, demand is coming in, demand is coming in. The biggest question that we usually would have is what is the result? What is the result of this demand? And we're seeing how all of these rallies right here are starting to diminish relative to the rallies that we've seen in the previous trading range, especially initial change of behavior, initial automatic rally. So this is kind of like a local automatic rally right here. So by comparing these two, we're seeing weakness continues. So we might as well hold on to this position. Again, myself, I probably would be out right here. This would be just my trade. And then I would reinitiate somewhere around this area right here. All of this is another potential point of entry. And then I would be thinking here, well, look at this. Look at the last extension that we've just discussed. And look at this extension right here. There is a shortening of the thrust. So I would be very aggressively coming out of this position here, here, or here. Those are the three spots. So instead of one trade, I probably would have two. And that's the only difference in thinking here as to how to trade this. But I really like the selection. I really like the point of entry, and I really like the mental capacity. Hopefully, that was kind of coming from the analytical judgment, to stay until the target is being hit and to actually be correct on that. So, Franz, these are my kind of like thoughts on the trade.
Very, very interesting analysis. And this is intraday action. These are 5-minute bars. And I think the fact that you would be looking at multiple iterations of this trade is probably the way you'd want to approach it. I'm not an intraday trader, but I think that's certainly from a standpoint of getting the most efficiency out of the use of your capital, it does make a lot of sense. So really good points. Do you want to take a look at the post analysis?
Yes, before you do that, Franz, the only reason, Joseph, why I'm talking about, like, I would probably be covering right here or trimming here. I want to avoid situations like this, where very rapidly out of, let's say, secondary test, we have some kind of big push. Now, we could probably be thinking like, well, there were no big pushes like in this area right here or in this one right here. So we're going to repeat this here. Yes, we could think this way, and this is exactly what has happened. But also this could happen. Only from that perspective, I'm saying that I probably would be like, coming out twice and coming in twice. All right, Franz. So how's the post analysis looking?
Well, first of all, bias, he's definitely looking at a downward bias, and he's got that correct. The timing, I think, for the entry was very good. So yes, on that. He's giving himself a no on the character. Yeah, I'm not sure I agree with that. We're looking at impulses here, and we're getting the proper preconditions for the impulse to the downside, which he recognizes, and he takes advantage of that. You're right. I mean, it does not have the same momentum or velocity to the downside, but it's still, you know, a fair amount of return in, you know, a short period of time. So, what do you think on his
Yeah,
evaluation
this
of
is
the character?
questionable to me as well. I thought that the character is defined correctly. You're picking the stock, I'm sorry, the asset, the cryptos that is, let's say if you're short and you want that aggressive character to the downside. And just a thought came to me as Franz was talking. This aggressiveness with which it's being sold and lower highs throughout is suggestive that we're going to have a low kind of like resolution into the low phase B or phase C. So from that perspective, if Joseph was thinking this way, that we're going to have a low, then it did make sense to hold on. Maybe a trim here, but holding on into the target zone right here. But I think that mostly it was like the target that was being used. So yeah, I would say character is probably yes to me, Franz.
Mm-hmm. Mm-hmm. Point of entry, I think we can see very, very good recognition of precondition and then getting in at the correct point there. His initial stop loss, he gives himself an X on that as well. He is placing it above the range, and we saw, as you pointed out, when you were analyzing this little structure here, that we're making slightly lower lows. So he is putting his stop loss above the highest one of those. So, you know, maybe move it a little bit more, but I don't really see an issue with that either. What do you think, Roman?
Yeah, absolutely. I totally agree with you.
Okay. As far as moving, and this is one of these nice enhancements that some of our students make to sort of our basic you know, pro forma of the post analysis. So he's adding an additional column for moving of the stop loss, because evidently that's something he wants to pay attention to in his own trading, and he's not moving the stop loss, and that's correct. So you know, maybe we would give him a no on that, and maybe that's something that Joseph wants to just make sort of a special notation of in his trading to pay more attention to. So what do you think about that, Ramon?
Yeah, I'm not sure about this either because we don't see how the stop loss has been moved. I would assume that once we break to the downside, Joseph is moving the stop loss above these two bars right here, which are constituting, you know, the breakdown below this area right here. That would be appropriate, and just to see if there is some kind of recovery. I would have the problem with this stop loss anyway. And this is again the conversation about, like, you know, are we trimming here or not? Why? Because if we're putting the stop loss right here, then what are we expecting? We are expecting that the price will not get, you know, to this upper part of the trading range again and still continue going down. This might be the case, but that also might not be the case. There might be some kind of, you know, like for instance right here, if the stop loss would be around this area, here are the two spots where, you know, there is some kind of danger of being hit and whipsawed. Same here, but we were lucky right here. So I probably would be thinking if my target is still somewhere down below right here, I'm probably putting it here and holding it here until there is a break to the downside. Why? Well, I don't want to be hit, but why here stop loss? Well, because everything is lower high, and we've just created the lower high. So therefore, if we're going to continue with the lower highs, then this level would never be hit, and then you could easily wait for the breakdown. So I'm assuming that that was kind of like the thinking here, but let's continue. What about the add-on, Franz?
He didn't make an add-on, and just back to what you were saying about the stop loss placement, I think it's really, really great that you walked us through sort of the logic behind this. A lot of times for me, I know sometimes I get very mechanical and I don't necessarily think through, well, why am I putting it here? It just seems like a mechanical place on the chart to place the stop loss. And I think it's great to have, you know, the understand the logic of why we place the stop losses where we do, when we move them, and why we do that. So thanks for that. As far as the add-on, there was an opportunity on that second break, I think, possibly to place an additional trade, yeah, when the break of that apex occurs and we see some further weakness. And clearly, I think Joseph had this final target in mind when he entered the trade. So it would, you know, potentially from the standpoint of capital efficiency make sense to put another, maybe not quite as large a position, but certainly some additional, you know.
Yeah, I would agree with this, Franz, because I mean, look at the rallies here, right? So the rallies were not that great. So if you still have the capital to employ, you could most definitely add. And so, yeah, I would definitely say no to this, meaning that we could have added. Okay, trims. Well, that one is interesting, Franz, because again, my preference would be to trim here and then maybe to add here. What do you think?
Yeah, I see that. And I think an intraday trader is going to be very, very in tune with each of these bars and seeing what's going on. So there would be a potential there when you see that initial pickup in the momentum to the downside and you don't see quite as much volume on this, you probably would be thinking, yeah, this is a good place to trim and then to re-enter later on. So agree with that. As far as the targets, I mean, is there anything else you want to add to that, Roman? Or?
No, I
Okay.
think that's good.
Okay. And then targets. I'm seeing this on some students, the kind of the basic pro forma that they're adding as well, because it does give you a way to, and as you're showing here, it does give us some expectation on what we can anticipate from the trade. And I see this, I think, in more advanced traders. I think as we become more aware of the structure and how the structure is unfolding and what sort of potential it can provide us with, it's really good to keep this in mind. So I like that. What do you think, Roman?
Yeah, I really like this target profile. You kind of right away see your risk, see your reward. You want your reward to have, you know, to 3-to-1 relationship to the risk. We have that exactly. It's much harder to get that 3-to-1 on the intraday. So your duration of the intraday trade has to increase. And here we're seeing that the duration took some time. It's not like your 5-minute trade or a 30-minute trade. Joseph stayed here for a while and was going through this trading range right here without any, P&L movement. So kudos for that, expansion of the idea of the intraday, that you could have, a much more meaningful move and meaningful PNF. And from that point of view, risk reward is definitely very helpful, because if your target is somewhere still down and you're seeing that the character in terms of the structure, price, and volume is still giving you the indication that we're in a bearish bias, then you stay and then you wait and you move the stop loss accordingly. So yeah, I mean, like, usage of the target's absolutely spot on, as that also, Franz, I think in itself, the target defines where we exit here, and then look how perfectly he exit on the tail.
Very, very nice. Nice trade. Yep, great evaluation and great analysis, Roman. Thanks for that. So according to Joseph, his variance is 55%. He's got some additional checkpoints here that may, first of all, we may or may not agree with, and secondly, that add into the, just the inputs that go into his variance. And I think when you're doing these post-trade analyses, you want to keep a running scorecard of your variance and see what your trends are, and you'd like to see that variance number gradually moving higher. And that's, it's not just for one trade to see how we did, but it's also to see the trend in our trading. So nice job of that, Joseph. Your overall post analysis, looking at the mistakes, he feels like his initial stop loss was too close, no add-ons, and no stop loss movement. And we already discussed that in the post analysis. His best practices, and it's really important for traders to keep track of what we're doing right, because not only do we want to sort of eliminate mistakes, but we want to reinforce the things that we're doing correctly. So he placed his stop loss 2 levels away, above all of the lows of the trading range and above the high of the previous supply bar. And this sort of plays to what you were talking about with the logic of where the stop loss gets placed. So I think Joseph is also, thinking this through, which is great. Monitor the trade for add-ons, and that's definitely going to help with the efficient use of capital. And monitor the trade to move the stop loss as long as there's good logic for doing that. And finally, with the feedback loop, stop loss 2 levels away, look for add-ons and move the stop loss. So he's basically taking the observations from this trade and creating a feedback loop for future trades, which is just great post-trade analysis. And that's what it's for. That's what we do, why we do this. So those are kind of my observations, Roman. What do you think?
Yes, I can't add anything to that. I think that we went through all of it. The only last thought that I might have is, and we don't know what has happened after the trade, I would suggest to all of you who are listening to this series religiously, and you guys are on the path of analyzing all of your trades, because we know that you guys, that we have a specific audience. There are specific people who are watching this series kind of like week to week. So you're picking up all of these mistakes and trying to kind of like see, do I have them in my trading? One of the things that I've noticed for myself and in students, because it's easier for me to see students rather than even myself, right? What I'm noticing is that after the trade, and this might be a successful trade, this might be a losing trade, there is no continuation of the analysis. It's almost like we are emotionally giving up on the analysis, on the further analysis, and we go away. And that might not be the case with Joseph here, but if you would start analyzing further what's happening, are there any other opportunities here? Let's see. Okay, so we said that there is a shortening of the thrust. Look at how supply is diminishing as well. So you're having a diminishing effort to the downside on diminishing downward result. Bullish or bearish? Short-term bullish. So you are expecting some kind of rally. Now you start thinking, okay, you are coming out of this spring position and a test after that. And look how high the test is relative to the low of the spring. So that suggests that the character of the rally is going to be aggressive. So now you're thinking, okay, aggressive rally, could I participate? Where could it possibly go? Your first target is just the high of this trading range. Your second target is going to be the breakdown bar right here. So here is your target zone. And now you're thinking, okay, right here and up to this level, you basically recreating the same distance of the initial trade. Is it worth taking? Well, the preconditions of the diminishing selling, the successful test with the low supply level, very, very high suggestion for the aggressive rally, I'd say yes. And your expectation here should be that this rally is going to take less time than your last trade to the downside, because what you are trading down is the exhaustion of selling. What you are trading on the upside here is the excitement that this could have been the low. Whether it is or not, you don't know. But, there is more excitement there, so there is going to be more aggression. And this bar right here is our change of behavior bar. Why? Because it's the biggest, largest bar on the way up. There is nothing like this. So therefore, it is our exit as well. So here's your second trade. And then after that, you starting to think, here is one failure, here is another failure, and then you have this big volatility right here in this bar, and then bigger volatility to the downside. So then, again, this bar right here is the change of behavior. Here's another failure. Here's another failure. So you have multiple entries here to the downside again. And that comes after the aggressive rally where demand is coming in and a lot of weak hands are buying, right? So as they are buying into the global upthrust, the failure of that is going to produce a much stronger and quicker movement to the downside than we had on the exhaustion of the supply movement. So therefore, here's your trade number 2, here's your trade number 3. And again, the idea here for everyone to kind of, think about is do not stop your analysis after your successful or unsuccessful trade. Sometimes in a lot of our unsuccessful trades, there might come the next trade that would be exactly what you want, but you already emotionally withdrew from this. So something for us that, we definitely think as traders, we definitely see as a mental kind of lapse, and happens very often. So just a cautionary note.
Great highlights there. And yes, I mean, isn't it really, really cool how in this intraday time frame, how many opportunities you get? So instead of thinking of it as exhaustion, thinking of it as, wow, right around the corner could be another really, really nice opportunity. I'm going to stay in tune, stay tuned in, and wow, there it is. Look at that.
Yeah.
So just go ahead, Roman.
Yeah. Well, I mean, I am agreeing with you, Franz, here. You gotta stay on. And I would say, this was an amazing trade. Why? Because execution-wise, I think it's perfect. I mean, we are nitpicking here, Joseph, obviously, but we're praising you. We're commending you for such a, handle of this trade. And again, I'm not sure even if I could hold on to it like that, I could probably find the reasons, with all of this aggressiveness. But then I think the next level for Joseph is just to think, and maybe that was done. We just don't see it on this chart, right? Maybe there were some trades here. So that's a mentality of kind of like a very mature specialist, let's say on the intraday in cryptos, that would be thinking, could we see the increase of volatility around this area? And obviously, sometimes we're not available, so who knows what kind of timing is here. But Joseph, if kind of like there was no thinking about the continuation of trading here, then I would suggest to at least analyze what comes next. Are there any other opportunities? And with that, Franz, I think that's it from me on this trade. Pretty good trade.
Great. Yeah, thanks, Roman. And really, really grateful to our students, our fellow students, because I'm a student as well, for submitting their trades and giving us all an opportunity to learn. Because when we look at what other folks are doing in this trading arena, we can definitely take good lessons back for our own trading and improving our own operations. So thanks a lot, Joseph, and thanks for all the students that participate in Anatomy of a Trade. And with that, thanks to Roman for, again, another cameo appearance. And it's always great having Sensei here with us, and looking forward to a great coming up year in 2023. And with that, till next time, everybody. Thanks, Roman.
Thank you, Franz, and happy holidays, everyone.